Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Daybreak Weekend, our global look at the top stories in the coming week from our Daybreak anchors all around the world. And straight ahead on the program, a look ahead to this week's monetary policy decision from the Fed. Also earnings from more of tech's Magnificent Seven. I'm Tom Busby in New York.
I'm Caroline Hepker in London, where we're asking if President Trump's Scottish golf trip can yield any political wins.
I'm Doug Krisner looking at the Chinese economy ahead of fresh PMI reports in the coming week.
That's all straight ahead on Bloomberg Daybreak Weekend. On Bloomberg 1130 New York, Bloomberg 99.1 Washington, D.C., Bloomberg 92.9 Boston, DAB Digital Radio London, Sirius XM 121, and around the world on BloombergRadio.com and the Bloomberg Business app.
Good day to you. I'm Tom Busby, and we begin today's program with this week's Federal Reserve policy meeting. The Fed will issue its latest decision on interest rates on Wednesday, with a press conference expected from Fed Chair Jay Powell to follow. What will the Fed decide, and what's behind the central bank's thinking? And for more, we're joined by Edward Harrison, senior editor at Bloomberg, author of Bloomberg's Everything Risk newsletter. Well, Edward, a critical decision from the Fed. What are you expecting to see happen this week?
Hey, Tom. Yes, it is a critical decision because of the political pressure that we've seen applied to the Federal Reserve. The market widely expects interest rates to stay the same, in particular because we haven't implemented the final round of tariffs yet. We don't know how the economy is going to react to that. If you look at the pricing from the market, it's expecting not just this meeting to be the same, but there's only a slight chance, maybe a 60% chance that we get a cut in September. It's first in October when the next rate cut will come.
Wow, that's a change. But Chairman Powell has said time and again, he has said it's all about the data, and that the central bank has to see the impact of the Trump tariffs on inflation. So it really is too soon to make a move because we just don't know. There's so many moving parts with these tariffs, correct?
Yeah, and the interesting bit is when the Fed actually moved to lower interest rates in 2024, the market's reaction was that this took all of the risk of a recession off the table, so much so that interest rates actually went up. So they lowered the short-term interest rates, but the yields on longer-term bonds, the ones that actually matter to people when they're getting a mortgage and so forth, those are the ones that went up. And so it was because the recession risk receded that you actually had a situation where the Fed was acting one way and long-term yields went the actual opposite direction.
Well, I think, on Wall Street, we have seen the major averages at or near all-time highs the last few weeks. Inflation still above the Fed's target, but it has eased about 2.7%. The labor market, resilient, jobless rate 4%, initial job, everything is working. The Fed's plans have been working. So the argument could be, well, why not lower interest rates? But there's a very good reason why they wouldn't, correct? Just for that reason you were talking about with long-term yields.
Right, exactly. They don't know if, for instance, they were to lower interest rates, whether or not suddenly we would get inflation coming back in, not just because the tariffs created more inflation, but actually because the economy was running hot enough to create inflation on its own. And then suddenly they'd be in a situation where they made an error, and that error would be taken on by markets to increase interest rates, increase yields across the curve, expecting the Fed to eventually have to undo that error. And this is the dilemma that they face. So they've decided, look, we're in a good enough position at this point in time that we can actually wait to do this. What's interesting, if you look at the last Fed decision, they released a summary of economic projections and sort of a bimodal distribution. There are actually 7 of the Fed governors and presidents who think that they shouldn't lower interest rates at all this year, whereas 9 think that they should lower them 2 times this year, and there are 4 others that are in there. But the total number that the reason that we have an expectation for 2 interest rates being lowered is because of those. I think it's 8 Fed members who believe that interest rates should be lowered by 2, but there are a decent number who think there shouldn't be any interest rate cuts this year.
And there's been a lot of pressure, obviously, from President Trump on Jerome Powell. A lot of criticism, a lot of pressure about what the Fed is going to do. And it goes into what you just said. He's not the only one deciding. I mean, there are 12 voting members of the FOMC. You have all these other governors and vice presidents and presidents of banks. I mean, it is not a unilateral decision, is it?
No, it's not. And the interesting thing about that bimodal distribution is that obviously we don't know which of the 19 dots in this summary are of voting members, but there are enough members that if the data turn towards the more inflationary side, you could get the FOMC outside of Jerome Powell saying, no, we don't even want 2 interest rate cuts this year. We want 1, and perhaps even 0, because all it takes is us to get 3 more dots up into that number, to go from 7 to 10, and then suddenly we don't have any interest rate cuts at all in 2025.
Well, the Fed's 2-day policy meeting kicks off this Tuesday, a decision Wednesday expected at 2 p.m. Wall Street time. Then, of course, we're going to hear from Fed Chair Jerome Powell. Our thanks to Edward Harrison, senior editor at Bloomberg, author of Bloomberg's Everything Risk newsletter. We move next to corporate earnings. Some of the Magnificent Seven's biggest names reporting this week: Meta Platforms, Microsoft, Apple, and Amazon. And for more on what to expect, we're joined by Mandeep Singh, Bloomberg Intelligence senior tech industry analyst. Mandeep, thank you so much for being here. Yeah. I want to start, though, by looking backward, because last week we got the latest results from Tesla and Alphabet. Very different results. Tesla missed earnings, sales fell, difficult times ahead. But Alphabet, there was a real upside surprise, wasn't there?
Yeah, and also going into earnings, I think the narrative was that Google search has been under a lot of competitive threat from the likes of ChatGPT and just what's going on in the LLM space. And the numbers proved otherwise. I mean, the fact that Google grew search double digits at a run rate of $210 billion, that just goes to show, how much momentum they have in terms of just their integrating Gemini with their search page. So AI overviews has actually helped, the number of queries. And then the monetization, ad monetization for Google is really, something that no one else has been able to even come close to. And look, we're talking about Meta coming up as well. So to me, what will be interesting is whether Meta shows, high teens or 20% plus growth, because that's the sort of expectation Google has set up with its print. YouTube did really well. In fact, YouTube plus cloud is almost a $115 billion run rate, growing at over 20%. And so a lot of positives in that Google print. The one thing I would call out is the CapEx spend. So Google did raise their CapEx by $10 billion for this year, and they said 2026 would be another growth year for CapEx. And that some investors could say would be a drag on free cash flow, but I would compare that to a Meta, which has already guided to a higher CapEx, and they are not monetizing at the same level as Google is with their cloud business. So that is where it would be interesting to see how the market reacts to Meta talking up CapEx for second half and 2026.
Another horse in this race, Microsoft.
Yeah.
Which, with their OpenAI commitments and still expected to see Azure, a big revenue gainer. How about the rest of the company? Where's Microsoft stand? Because they're out Wednesday as well, right?
I think one thing was clear from Google's print is Microsoft Azure business is going to put up another strong quarter. We are talking another mid 30% growth for an Azure, which was a real surprise last quarter. But now the numbers have gone up for Azure. So you will see another strong quarter for Azure. But overall, look, Microsoft has been one of the biggest beneficiaries of this AI infrastructure spend. and the cloud business that it has benefited. And in Google's case, it's a $50 billion run rate business, cloud, growing almost, 30% plus now. So that could double to $100 billion in 2 years. In Microsoft's case, it's the same kind of momentum. And that's why cloud is the real beneficiary of this AI infrastructure spend. On one hand, we call out how NVIDIA has benefited on the chip side. On the software side, it's the cloud companies, and that's where I would put Microsoft and Google. Amazon, which is another one reporting next week and has exposure to cloud, I think their growth rates are still way down compared to Google and Microsoft Cloud, which are growing, 30% plus. Amazon's growth may still be around that 17 to 20%. And
still strong. Still
very
strong
yeah. For a business of over $100 billion run rate. It's very good growth. When you compare the share in cloud, I do think, Microsoft and Google seem to be taking share because of this AI workload shift. And that's where Amazon has to kind of step up in terms of how they will increase the growth rate for their cloud business.
Now, the outlier in this horse race for AI, Apple, also next week, has been way behind, has no sign of even catching up except for partnerships it's making. But what do you expect there? I mean, the iPhone 16, a smash hit. We have services have been very strong, but are they still behind? They're still going to make a ton of money. There's no doubt.
I think with Apple now announcing they're getting into insurance business, the $20 per month for 3 devices, that's just aimed at improving the services run rate. To me, everyone looks up to Apple for what they will do on the AI side. And that is a big question mark whether they have a compelling AI strategy. I think they are going to go the partnership route. But right now, we have no signs to suggest there will be a big upgrade or refresh cycle for their devices, because AI right now is still being used on the cloud. People are not really using AI assistant that's installed on the phone because these LLMs are called large language models for a reason. They require a lot of compute and memory that you can't have on device. And so that's where Apple has to strike partnerships. They have to enhance their hardware to run AI on device. And we are talking about at least a 12 to 24 month time frame. So you're not going to see anything that investors will find exciting, at least in this print.
Well, a lot to look forward to. Meta and Microsoft earnings out this Wednesday. Amazon and Apple on Thursday. Our thanks to Mandeep Singh, Bloomberg Intelligence Senior Tech Industry Analyst. And coming up on Bloomberg Daybreak Weekend, we'll look at whether President Trump's Scottish golf trip can yield any political wins. I'm Tom Busby, and this is Bloomberg. This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. I'm Tom Busby in New York. Up later in our program, a look at some key economic data coming out of the world's second largest economy. But first, fresh from a flurry of trade deal announcements, President Trump is in the UK, in Scotland. His trip will be a mixture of business and pleasure, but in the coming days, the president is set to hold meetings with UK Prime Minister Keir Starmer and John Swinney, First Minister of Scotland. Can the duo sweet-talk Trump into further trade concessions? For more, let's go to London and bring in Bloomberg Daybreak Europe anchor Caroline Hepker.
Tom, President Donald Trump counts Scottish ancestry as part of his heritage. His mother, Mary Ann MacLeod, was one of thousands of Scots who left for the US and Canada at the beginning of the last century in a bid to escape economic hardship at home. But despite the family ties, the US president's relationship with the country is a complicated one. During his last visit to Scotland in 2018, the president was booed during an afternoon golf game by demonstrators at his resort in Turnberry. And the entire trip was dogged by protests of thousands of people in Glasgow, Edinburgh and Aberdeen. This time round, controversial White House policies could make for a similar reception as Trump visits his 2 Scottish golf properties. His plan for international trade is also something the White House press secretary Caroline Leavitt expanded on recently.
Look, I can tell you the trade team and the president himself continue to be very engaged with countries around the world when it comes to our trade agreements. But the August 1st deadline is just really the start date for when the United States of America will begin collecting this revenue from all of the countries around the world who the president has sent these letters to. You could see some more letters before August 1st, John. You could have some more trade announcements as well. I can tell you the president, Secretary of Treasury, Secretary of Commerce, Ambassador Greer all continue to be in constant communication with our trading partners.
The White House's Caroline Levitt speaking to reporters there. Well, joining me now is Bloomberg's Edinburgh-based reporter James Lodden and our White House correspondent Skylar Woodhouse. Welcome to both of you. Thank you for speaking to me. James, maybe can I start with you? Trump has long been, I'll say, infatuated with Scotland. The Scots perhaps a bit less so with him. Just talk us through the perceptions of President Donald Trump on the ground now.
In your intro, you did mention how there were some demos against him when he was here last. I think those demos were more personality-based, whereas I think the demos that are being planned are both personality and politics-based. So there's a subtle difference there. One thing I think that you need to sort of remind yourselves about the kind of Scottish psyche, if you like, is that someone who, shall we say, is kind of pretty brash and a showman, that doesn't necessarily go down very well here in Scotland. They tend to admire people who are a bit more understated, and also Scotland does have a reputation of cheering for the underdog over the years, and certainly having a slightly larger big brother, shall we say, to the south that's been dominating proceedings for several centuries. That also probably explains why Scots, they prefer the underdog rather than the top dog.
Okay. Skylar, President Trump's also coming to the UK for a full proper state visit in only a few weeks' time. Why do you think he's making this trip to Scotland now?
I mean, the White House is saying, this is a moment for the president and Prime Minister Starmer to refine the trade deal from just a few months ago. Hopefully we'll get an update on what's maybe some more of the fine print details of that trade agreement are. And there's obviously a lot happening in the world right now. There's, Ukraine and Russia that has been, front and center for President Trump. And, so we're, looking to see if we could see any sort of maybe new agreement between the two countries there, or just sort of what the strategy, might look like. So there's a lot of talk around national security right now. So it's kind of a mix of, the president who we all know loves to golf and frequently he'll be in Florida, golfing and things like that. But, we're expecting to see probably a more refined trade deal than what we saw earlier. Yeah,
absolutely. And tariffs hugely important. I mean, both for Keir Starmer, the UK as a whole, and Scotland in particular as well. Is there going to be any expectation, actually, of any progress in terms of trade discussions, do you think?
I think one thing that's particularly interesting with the trade agreements that we've just been seeing across the board, obviously this is something that President Trump is very passionate about and is definitely dominating his second term in as president. So I think it'll be interesting to watch what the fine print looks like. We're approaching that August 1st deadline with a plethora of countries, and we're starting to see, the rates coming in, at different levels. So I think it'll be interesting to see what maybe has changed from the deal that was presented a few months ago to now, and to compare and contrast what has changed or what has not changed.
James, what do you think the Scottish First Minister John Swinney is likely to cover, maybe try to press with the US president?
Well, I guess the biggest thing here is whiskey. Personally, not a fan. But it's the biggest export that we have up here, and any potential reducing the tariffs on whiskey, I think, would go a long way up here. But at the end of the day, the person who will sign the document is going to be Starmer. So there's a slight sort of dichotomy there. Otherwise, Swinney, he is involved a little bit in the long-running saga about whether Turnberry, one of Trump's golf sites, will ever host the Open again.
Yes.
So there will be some chat on that, I dare say, but at the end of the day, the decision comes down to the Royal and Ancient Golf Club in St Andrews, the R&A, but there will be pressure from Sweeney and also from Starmer to try to make this happen. But then to make it happen, you kind of need to have much better communications. You must have much better roads and rail systems. And to get that, you're going to have to get the taxpayer to stump up for it very probably, and that will be a big problem.
In terms of travel, it's obviously quite a privileged position for the UK to be in, and Scotland in some ways, to be hosting, a visit, even an informal visit from the US president, given how much is riding on this. I mean, President Trump's actually got some cousins who still live on the kind of ancestral island where his mother came from. How important do you think the relationship is at the moment, Skylar, between the US and the UK, as we see these really quite fraught negotiations with many countries rushing to try to make the August 1st deadline?
I think one thing the Trump administration, they do a lot of things differently, but ultimately I do think there is an understanding that the relationship with the UK is a very important one that obviously has a very long-standing history. So I do think the administration is looking to sort of continue to keep that relationship intact in whatever way that might be. I mean, but it's still very interesting that of the trade deals, the UK was one of the first to see a deal and an agreement. And there was the Oval event where Starmer, I believe, phoned in. So they're definitely trying to show a united front between the two countries, which on the global stage could be very telling that we have the US and the UK sort of aligned, even if there are differences, on some things. But, I do think the administration is, looking to sort of, make sure that relationship continues to remain stable.
Yeah. In terms of what you expect then also from the state visit in September and how important that is, we've had out for example, the car and truck manufacturing figures for the UK. That's a very important market for Britain, the US, sending vehicles there. It's actually just below the relationship with the EU, but it's still very important. And actually, we've seen a big kind of cratering in terms of the numbers of vehicles that are being exported and, in fact, just rolling off the lines here in the UK. How important is this kind of are the sector issues between the US and the UK? And do you think anything might change, let's say, in the September state visit? How is that being seen in the US? Yeah, no,
it's a good point to mention the sectors, because that's something we're watching very closely in the mix of all of the trade deals. But when you boil it down to the sectors, whether it's autos, pharmaceuticals, that's a space, where we're, trying to see if there's any movement there, because we still haven't really seen a lot of details in the pharma space, but it has been something the president talks about pretty frequently. So we're definitely watching that space. But I think in the U.S., in terms of perception, one thing, what we've been seeing a lot right now is there's just a lot of back and forth. And, with this administration, they definitely keep us on our toes. But, they move forward with one thing, and then there can be a shift in the policy a little bit, whether it's more or less. And that is something I think folks are really paying attention to, because it does shake up what exactly is going on if you say one thing and then it changes. But the president continues to say that, if you accept, American products and we can, enter that market, well, we won't tariff you or tariff you less. So, that's what Trump has been negotiating with around that.
Yeah, absolutely. James, a thought then from the perspective in Edinburgh. I mean, I know that you know quite a bit about golf and all the golf courses that are up in Scotland. I mean, how important do you think that the trip is for the US president to spend time in Scotland? As Skylar's sort of pointing out, the US president is known for being changeable, and maybe that offers a kind of opening in terms of influence.
Yeah, it does a bit. And it's easier for him certainly to come to Scotland rather than England. He can't sort of hide so much, if you like, in England if he wanted to. And he does have these two golf properties up here, which are very high profile. They're also very good courses. And then he is having that sort of idea about, look, I'm here in my homeland of Scotland. I mean, leaving aside the fact that it would take you 8 hours to get from his site in Aberdeen to where his mother was born on Lewis. It's kind of a long way away. But he will play up this idea about him coming home, sort of thing, which you have to say is taken with a very large pinch of salt from many of the local populace on that. But that sort of idea about him coming to where he thinks his roots are, that probably makes it easier for him to feel in a way that he is negotiating or talking with Starmer on something of a level playing field, if you see what I mean. Yes, he's a visitor, but he also kind of gets the Scottish thing.
James, thank you so much for being with me today, Bloomberg's James Larden, and to Skylar Woodhouse on your first trip to Scotland and here in the UK. Thank you very much for your time. I'm Caroline Hepker here in London. You can catch us every weekday morning for Bloomberg Daybreak Europe beginning at 6 a.m. in London. That's 1 a.m. on Wall Street. Tom.
Thank you, Caroline. And coming up on Bloomberg Daybreak Weekend, to look ahead to some fresh economic data out of China. I'm Tom Busby, and this is Bloomberg. This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. I'm Tom Busby in New York. Market watchers turn to fresh economic data this week for a temperature check on the world's second largest economy. For more, let's get to the host of the Daybreak Asia podcast, Doug Krisner.
Tom, the outlook for the Chinese economy is showing promise, and recently Bloomberg Economics raised its full-year growth forecast for China to an annual rate of 4.8%. Now, to be fair, hurdles do remain, and there is still the need for policy support. In the week ahead, we'll get a clearer understanding of where things stand with the release of several PMI readings. They'll help capture sentiment among Chinese manufacturers and services providers alike. To help us look ahead, I'm joined by David Chu. He is China economist for Bloomberg Economics. David joins us from our studios in Hong Kong. David, thank you so much for taking time to chat with me. Can you begin by giving me kind of your view on what we may learn this week from the PMI data for China?
Yes. What we can say is that we expect the manufacturing PMI to soften a bit from last month because we saw some leading indicators and high-frequency indicators pointing to the marginal slowdown in the manufacturing activities. I think one of the reasons is that the front-loading export is somehow it had slowed a bit after the peak in June. So I think that is the reason. Another reason is that we think the cloud of the trade war is still there, so that people are not so confident to expand capacity, so that the overall manufacturing activity should slow down after acceleration in June.
So when it comes to the services economies in China, how is domestic demand right now?
Well, for July, because it is a summer holiday season, so that we think the service side will be supportive to the non-manufacturing PMI as well. But on the other hand, we think the construction is still steady compared with June. So overall speaking, we think the non-manufacturing activity should accelerate a bit from June.
Give me your sense of the extent to which the property market, as negative as it has been, is still a major drag on the economy. Is that beginning to change even slightly?
Not yet. Based on the sales data, we think the activity in the housing sector still drag, and it may be even worse than the last month based on the new home sales data so far. So looking forward, we don't see anything that, for the housing sector to rebound soon, even though we have seen some stimulus by the government over the past several months, but still it's soft.
If you had to point to a bright spot for the Chinese economy right now, what would it be?
I think the production side is always resilient, although if you look at the PMI, it is still underwater. But if you look at the production side of the China economy over the past several quarters, it's still resilient. But on the other hand, this what drives the economy or what is the key for the economy is the consumption side. So that now we emphasize the importance of consumption more and more, so that what we are looking at now is the consumption, not the strong part, which is good production.
When I think of the production side, though, I think of the tendency for there still to be a little bit of overcapacity in the system. Is that being taken out slowly and steadily?
Yes, there has been more and more talks about the remove of the overcapacity, but we have to say that overcapacity means it is more than demand. So that I think the government needs to do more in the consumption side to boost the demand, so that to reduce the difference or the overcapacity on the one hand. I mean, the relative overcapacity compared with the demand side. But as well, we think the government is doing something to, we call it anti-involution, so that to reduce some of the capacity in some way, and also let people have more time to spending so that they can spend more money.
We know that the overall economy has been in deflation, particularly at the wholesale level, where you're looking at factory gate inflation. To what extent do you believe authorities in China are very concerned about this right now, the stubbornness of the deflationary story? And I realize that maybe on the consumer level it's more disinflationary rather than deflationary, but still there seems to be this overall pull that has to do with declining prices.
Yes, I think the government is concerned about the deflation a lot, because the PPI is quite correlated with the profitability of the manufacturing sector. So that you may know that many of China's biggest manufacturers, they are SOEs, state-owned enterprises. So that if they're making a lot of financial losses, that the government must be worried about that. I think that is one of the reasons why the government is considering taking some effort to remove some of the overcapacities. Based on our experience in the 2018 round of cutting overcapacity, this would raise the PPI effectively, so that to raise the profitability. But still, the problem is that the disinflation in the consumption side will probably be still there, based on the experience from 2018.
David, thank you so very much for making time to chat with us. That is David Chu, China economist for Bloomberg Economics, joining from our studios in Hong Kong. Shifting gears to tech now and the Chinese consumer. I spoke with Stephanie Leung, the Chief Investment Officer at Stashaway. We discussed how developments in artificial intelligence are shaping her investment strategy. Here's part of that conversation.
If you look at the latest economic data, it doesn't look like that the China consumer is doing a V-shaped recovery. And I think that's because of a few reasons. Number one is that, of course, if you look at kind of where a lot of Chinese consumer hold their wealth is still in the real estate sector. And real estate sector is still in a very, very long road to recovery. And I mean, without that, actually, most Chinese consumers are kind of tightening their belts, right? They're not really spending that much. However, if you look into kind of, I think some of the pockets where people are spending, and those tend to be kind of lower ticket items. By that I mean, for example, just kind of tea drinks, for example, or these these are like sort of figures. For example, one of the companies, Labubu, has Labubu, which is very, very popular kind of figure in China, and people are crazy about these. These are kind of lower ticket items that gets very, very popular in China. So I think these are themes that you can still play within the Chinese consumer sector. However, when you look at kind of the bigger ticket items, for example, autos, for example, even luxury, these are kind of still in sort of the road to recovery, I would say.
I'm going to play to one of your strengths, technology, and particularly artificial intelligence. How do you understand the risk of some of these AI-backed chatbots posing some sort of risk to a business, even for Baidu in China, which has around 70% of the search market. Is AI a way for this to be reimagined, do you think? And maybe does it represent a near-term risk?
Yeah, I think, you bring up a very, very good point, right? In the sense that, of course, if you think about the internet era, search was a very, very profitable business. And Google, Baidu pretty much have like a dominance or monopoly in these businesses. However, as we enter the AI era, if you think about kind of just what people go to search engines to do, they're basically asking questions. And you can ask these questions much more directly and get much better answers by going to the LLM chatbots to ask the same questions, and they will give you a much more comprehensive answer rather than just the 10 blue links that Google would provide. And I think that actually creates a sort of a dilemma for companies like Google in the sense that, they know that that's the direction that things are going. However, of course, they have existing sort of earnings to try to protect. So they need to, they are trying to actually strike a balance between like kind of not cannibalizing the existing business, but meanwhile making efforts to make sure that they don't get this kind of extinct in the new AI era. So for example, AI, if you go to Google search right now, you see that they will provide a AI generated search summary. And that's sort of some of the efforts to help the company to migrate.
So if you're looking at opportunities in AI in China, are you more focused on the software side, or are you looking at the hardware story and maybe semiconductors? How do you play it?
I think if you look at the semiconductor or hardware side, it's very, very focused in a few kind of companies that have the technology. So by that, for example, NVIDIA. NVIDIA has the chips that are kind of ways ahead. And if you look at all the recent kind of announcements from big tech companies, like, for example, Meta's big announcement of the data centers, they are still predominantly using NVIDIA technology. If you look at kind of in China, of course, recently President Trump lifted the restriction to export H20 chips to China. And NVIDIA is receiving a lot of orders, and they're citing supply shortages. So still, NVIDIA is the kind of the dominant player in the infrastructure layer. Of course, companies like Huawei are catching up, but I think they are still kind of somewhat behind. On the application side, I think that's where it gets more interesting, right? Because it's not that kind of dominated by one or two players. I think in the application side, you can see a lot of very creative uses of the underlying technology in terms of driving usage, driving revenue, or cutting costs. And here, I think you can see that in the U.S. there are different companies in different verticals, making like big strides, and also in China, right? If you look at kind of the software companies, I think they are one of the first to benefit from these AI coding agents, for example, and these actually benefit a lot more companies than just the infrastructure layer. That
was Stephanie Leung, the CIO at Stashaway. I'm Doug Krisner. Catch us weekdays for the Daybreak Asia podcast. It's available wherever you get your podcast. Tom?
Thank you, Doug. And that does it for this edition of Bloomberg Daybreak Weekend. Join us again Monday morning, 5 a.m. Wall Street time for the latest on markets overseas and the news you need to start your day. I'm Tom Busby. Stay with us. Top stories and global business headlines are coming up right now.